the market's doing nothing. It's the ES is exploding right now by 0.03%. Although I'm not going to bellyache because I still love this market. It's as I've tried to articulate the past few days, it's become a real chart pickers market. A lot of opportunities out there, and hey, I'll happily take half a point up on the ES as opposed to like up 200 or something like that. This is I'm still having a ball. Hope you are too. I've got my charts preloaded and we can talk about them as I go. So let's hop in there and we'll begin as we always do with the spider. And Mr. Spider's hanging out under Mr. Top. This top, we've got kind of three key lines here, the lowest of which is anchored to last Wednesday's explosive move higher. And there it sits. That's important. If we should start falling again, the two objects to pay close attention to, the two levels, is one, the low from last Monday, way down here, and two, which is barely any different, this trend line. Day to day, those will converge. There will come a time before too long where the trend line level will be higher than that low. But my point is that that particular trend line represents multi-decade support. And of course, psychologically, people would freak out if we did slip below last Monday's low. Should that happen, I would be very inclined to cover a whole bunch of shorts myself. We ain't doing nothing like that now. It's just kind of sitting there. The market has been just grinding around pretty much since Sunday's open, doing a whole lot of nothing. Here's the diamonds, down just a little bit. We've also got a couple of levels on this to watch. One is anchored to recent highs, and then up here is that big old price gap. As I said yesterday, there's usually like two levels. The lower one, recent highs, and then the other one up at the gap that took place when just everything went berserk. Small caps, IWM, up a little bit. See, it's just a mix. Some are down a little bit, some are up a little bit. There's nothing moving in anything in an exciting fashion this day. IWM fell a lot farther, and its bounce has been relatively feeble. So we've got this peak, this gap, and way up here, which I have no illusions about it going to. This was the prior lower highs. We were bouncing down, boing, 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 and all the way down. So at most, I would expect it to clamber back up to this level. Based on, I don't know how much more they can surrender, but bigger white flag, I guess. I'm not sure what else they could do. The cubes up a little bit more heartily. Zooming in here. And the levels on this, we've got this one here, 467.83, which is the peak from last Wednesday. And this, as with the small caps, was the prior lower high. So all in all, just very generally speaking, we are sitting below massive amounts of overhead supply at a price level that's pretty compelling, I think, for short setups. We're not in the mayhem we were last Monday, where everything was collapsing, and if you were shorting, you were getting horrible prices. We're benefiting right now from that omnipresent, ubiquitous optimism that people are injected with. It has perhaps opened up some new opportunities for us. Anyway, SMH deserves a look. That's the semiconductor index, since we're kind of on the topic of tech stocks. This has been a whole quartet of lines like so, pretty evenly spaced too, interestingly enough. You'll notice, so we've got a gap, and here this peak, and then this peak, and then this peak, like so. So it's kind of a nice clean zigzag. Look at this, kind of cool. Zip, 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 zip. Each zip more dramatic than the prior. And each recovery more dramatic as well. So, hence all this volatility. But this too seems under a lot of overhead supply, added to which, not to get too deep in the weeds, but the kind of rare earth metals that China is saying, you ain't getting none of these, is crucial for the likes of NVIDIA to make their products. And yeah, this is becoming like a minerals war at this point, now that we've alienated Earth. So yeah, we live in interesting times. So that semiconductors looking pretty vulnerable there as well. As far as EFA goes, this sealed its gap and then some. The gap had been down here, like so. We went zipping past that today. I'm still in this position though. One thing, it doesn't move that horribly, so I'm comfortable taking a little heat on it. I've upped my stop to today's high, but I really like the looks of this setup. The fall was very dramatic. The recovery was just as dramatic. We've erased virtually all of that plunge that we saw for reasons I can't imagine, because the world has changed so much. But yeah, EFA is looking interesting. I would also mention, as far as China goes, it's like much sloppier. I wouldn't trade this. It's just a pretty inscrutable graph. But it is interesting that I read that China has, as is the fashion for governments, stepped in, and not only has their so-called national team plunged the country deeper into debt to buy stocks in the open market, but they've let the hedge funds know and big investors know, yeah, you're not going to sell any more stock, or else we'll be paying you a visit. And so, they live in a dictatorial state where nobody really wants to be disappeared into a prison somewhere. So it's like, well, should I be tortured or just not sell stocks? I think I'm going to go with holding them. In fact, I'll buy some stocks. So the Chinese government is terrorizing its investors. They're saying, lay off the sell button, kiddo. At some point, the U.S. will do the same, not to that degree. I don't expect I'm going to be disappeared, but I'm highly confident at some point in the not too distant future, the government will get cute and they'll ban short selling and they'll make puts illegal or God knows what else. They've done this sort of thing before, time and again. Anytime they run out of ideas, they go after the villain, which looks an awful lot like me. People who, sell short and who are, the bears, which constitute like 0.00001% of the investing population, but somehow we're so powerful we can make markets collapse. So I'll never say how. Gold keeps on keeping on. It is tremendously powerful. God bless it. Doing great. Yay, gold. Silver is also a little green. It's as I say this every day, sorry, but it's at the mercy of gold. As long as gold keeps kind of muscling higher, silver probably kind of like a little brother kind of tag along behind. If gold ever starts selling off, I think silver will melt pretty quick because it's so relatively weak compared to gold. It's so dependent upon precious metals being strong in general. But hey, I'm a fan of silver too. Keep going. Miners, another good day. Here's GDX up over 1%. New multi-year high on this. The juniors, even better. Another multi-year high on this one as well, up about 1.25%. So all precious metals are doing great. The one metal thing that I'm cheerfully short and massively short is XME right here, which is down. How about that? I don't know by heart the components of XME, but I know it's not, base metals or something. It's I think there's some precious in there here and there, but on the whole, it's things like FCX and non-precious metals are present there as well. At the risk of doing something I'm not limber enough to do and putting my foot in my mouth, this is my favorite ETF short. It's crisp, it's clean, no caffeine. I mean, it's got a nice clean gap there. It's a beautiful setup. So I have got an irresponsibly large short position and long puts. I have precious few options these days. I'm mostly just in straight up equity short positions, but XME, that's the exception. I've been gobbling that up. So yeah, that's XME, a real favorite. Within that, FCX, I'm also short. They have a very curious way of spelling their companies at Freeport McMoran, but it's got a pretty cool setup too. So yeah, all across the board, looking real good. What else am I up to? What other villainy am I committing? Oh, well, here's a few other short positions. Here's Amazon down, which is what we want to see. Stop loss is like so. Meta down again, double digits. I guess the old Mark Zuckerberg makeover is probably finally done, thank God. But this is cutting lower, so that's good news. Caterpillar also down a little bit of a different creature than Amazon and Meta, but in each of these cases, just gaps, very, very clean gaps and big distance between present price levels and major support. Pepsi, PEP, I mentioned this one before, beautiful top on that, just this tremendous dome on that going back, how long? Years, 4 years on that. So that's the sort of thing where it's like, I could be short this a year or two, maybe, you know. Home Depot, down about 1%. This had bounced up to here, but you know what? Let's just tighten that sucker up. I think that'll do. We'll just tighten that up to today's high. So that's HD. And this is new. I didn't come into the day short this because it's up huge. But today I re-entered Netflix with a stop right up here. My stop is $1,001, real simple. It's not as amazing a setup as some of the others I showed you, but it's not bad. It's kind of a range bound sort of thing. You can see it's been kind of warbling between 1,000 and 850 or so. So it's getting on the high side of that. And weirdly, people years ago would think this is astonishing, but Netflix is just kind of a flight to quality. It really is. It's like Netflix is the safe haven now. And so it's been very strong as people are like, well, I got to buy something. Might as well go with a blue chip like Netflix, you know. So taking advantage of that. Show this from time to time. This is the percentage of stocks above the 200-day moving average. Naturally, it's been lifting quite a lot lately because of the recovery. We bottomed out 7 trading days ago. And so this is pushing higher. But as I pointed out, even though this is a very derived instrument, it behaves and has the personality of a stock chart. And so in this case, we're getting this nice series, lower lows and lower highs with increasing drama as well. Just to wrap up, here's the ES again with our Fibonacci tenths. And this whole green zone right here, this is the overhead supply. We're in, high-ish in this pink area, which is the next fib level down. And as I said yesterday, provided we do not cross above this dashed line, I think this is a terrific position to be in. And the NQ, very much the same story. There's those beautiful tenths right there. Zooming in, we've got our nice top right here. The top of the fib is like so. And that would be our limit. It would be helpful if we didn't even cross above last Wednesday's peak, but just above that is the fib zone, and that would be the hard stop on that one.